Bitcoin and the cryptocurrency market have continued to aggressively drop toward the downside, now retesting 63,000, down 50% from its macro 2025 top. We can see over $2 billion in liquidations over the past 24 hours as this correction begins to aggressively speed up as a consequence of dropping below that midline of the Gaussian channel. In today's analysis, we are going to be discussing how the speed of this bear market may potentially impact the bottom date and the bottom target. We'll also be taking a look at all of the macro indicators and the 4-year cycle to discuss the progress of this bear market, our next targets and expectations, as well as the exact indicators we are going to be using to predict the exact bottom. We'll also be taking a look at the Ethereum price action as Ethereum has aggressively continued down, pretty much mapping this fractal, and we'll be taking a look at the total cryptocurrency market cap as that is tumbling, and the short-term charts. Before we get into it, make sure to smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin, focusing on the facts, the data, the technical and the structural information. No hype, no BS, no emotion, just pure raw TA. And if that is the kind of content you were interested in, you can join us on Telegram. That is the first link down below, getting access to charts, updates, videos, educational posts, news events, and everything you need to stay loaded for cryptocurrency with Bitcoin and the relevant economic news. Let's go ahead, guys, and jump into it. So, as we can see, the market has aggressively continued toward the downside. Now, we did tell you in our prior video there was a chance that we found some support around that $74,000 region. The reason we talked about that was because historically, after retesting the midline of the Gaussian channel, we have found a little bit of support there. Now, we did mention that any bounce that developed from 74,000 would likely be very underwhelming and lackluster, and that the break of 74,000, which we discussed in our prior videos, when that level breaks, we will see an aggressive correction for Bitcoin, and we have seen a correction of around about 17% since we have broken below 74,000. It's very important when we're looking at the macro context that we don't get too caught up in the short term and we zoom out, we focus on the overall direction of the trend, and the trend at the moment is still facing downward and we are still expecting lower targets. We'll discuss all of that in the analysis today. So Bitcoin has aggressively corrected. If we move over to a weekly chart, you can see that losing that 74,000 support has resulted in quite an aggressive red candle, just as we said it would, because we've seen similar scenarios of losing these sell-side liquidity levels with these aggressive red candles. We'll come back to this in a second. Moving over to the market data, we have seen massive amounts of liquidations. Over here, we can see $2 billion in liquidations over the last 24 hours. 1.8 billion alone coming from longs, the rest coming from shorts. Volume up 53% at 440 million. So a heap of volume flowing to the market. And of course, Bitcoin getting obliterated, Ethereum getting obliterated. And I actually want to show you a very funny video I saw today on X. This is people saying Vitaly, whatever his name is running to his bedroom to study his Ethereum. I think this is hilarious that people are posting stuff like that. It's just bloody hilarious. But nevertheless, Ethereum is down a significant amount since we predicted that top for Ethereum. Ethereum is down around about 62%. An absolutely mind-boggling number over here. 62% in a matter of 3 to 4 months is truly unreal for Ethereum. So congratulations to everyone who was able to avoid that pullback. Moving over, the DXY is bouncing from that 14-year long uptrend, so we are watching that one closely. Again, like we said, while we hold this uptrend, it's more likely we just kind of ping-pong around between 100 and this uptrend. If we break through 100, expect continuations. This would be very, very bad for the risk asset market. Of course, if we break below this level, we could see some relief for the risk asset market. So watch out for those two alternatives. Moving over, The S&P 500 has played out like we were warning. We told you guys that while we remain below this point of resistance, we were expecting these sell side liquidity levels to be swept, and we are actually dropping into those levels as we speak. So we saw that rejection play out perfectly. We have dropped below this black line, which is a significant level on the weekly chart, and of course on even the higher time frame chart. If we jump back to the daily here, the loss of this black line of 6,900 will likely trigger a further continuation into that 200 EMA, potentially 6,500. So what is this telling us? It's telling us that the downtrend for the S&P 500 is now actually beginning. We saw a lot of consolidation, a lot of indecision, a lot of exhaustion develop at this range. We have now cracked below a prior higher low, and we're now likely going to see a proper downtrend develop for the S&P 500. So the implications that has for Bitcoin is there. We'll discuss that later in today's video. That can definitely add some downward pressure to Bitcoin. Now, before we get into the rest of the analysis, I do want to go over a few more things, a few interesting things. We did see JP Morgan actually posted around 8 hours ago that they were looking to Bitcoin, saying Bitcoin's bullish, and I find it absolutely hilarious that 7 hours forward, so after they posted that 7 hours, Bitcoin already dropped 10%. Now, a lot of you are thinking, oh, JP Morgan, they can't be wrong. Well, I want to go back to a few posts we made. JP Morgan have been historically probably one of the best inverse signals for Bitcoin. Every time they're bullish, it drops. Every time they're bearish, it goes up. It has been almost comical. I've been tracking this stuff for years now. Even if we look at this post, 165,000 was their target for Bitcoin the end of 2025. They posted that on the 2nd of October, 4 days before the macro top, and we have seen a near 60% correction since. Absolutely hilarious stuff. Another thing we are looking at here is Michael Saylor. He is down a significant amount now in his Bitcoin investments, and we told you guys that, again, history often repeats. Michael Saylor got wrecked well before. It is likely he is going to get wrecked again. Based on his behavior, he doesn't seem to take losses. He seems to double down. As he starts to buy more Bitcoin, as Bitcoin drops in value, the MSTR stock price will likely continue to fall as investors lose confidence. So there's a lot going on over here. Very interesting stuff in the cryptocurrency space, and this market is, of course, suffering some big consequences now. So let's jump into it, guys. Before we do, sign up to BitGet, BitUnix, and BingX. Exchange links are down below. You will get a lifetime trading fee discount of 15% off all your trading fees. You'll support me in making the content, and you'll support yourself in your trading journey. Trading where I trade and where I trust. We'll see you back in just a second. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, legends, let's go ahead and jump into it. Now, a lot of people are wondering, Whale, this pullback for Bitcoin is happening exceptionally fast. How does this impact the bear market? How does this impact the expected bottom date? And could this play a role in maybe us seeing an earlier bottom at a higher price? Or are we going to still see this drawn out consolidation towards the bottom and have this lower bottom at a lower price? And I guess the simple answer to that would be, it doesn't really matter. What we are waiting for are the technical validations that the bottom is in, regardless when that develops. Now, historically, those validations have aligned exceptionally well with the 4-year cycle and the 1064-day bar theory, but let's just say hypothetically, we get those signals slightly early, we will actually be applying more significance to those signals than the 4-year cycle, because those are predictive and the 4-year cycle is diagnostic. So essentially, trust the cycle in essence, look at it and pay attention to it, but don't use it as a direct and sole only justification to make decisions. We still need to review how the strength is developing, how the buyers and sellers are reacting, and how the broader context of the economy is developing to make these macro decisions. So when we're taking a look at the price action, there are a few things I want to discuss. First and foremost, this is going to be our traditional 4-year cycle. At the moment, the 1064-day bar theory is suggesting that since we saw that play out perfectly to the 6th of October top, and we have an expected date range for the length of bull and bear markets, essentially a 4-year cycle, we can then go ahead and simply reduce or minus the total distance from the bottom to the top to the expected length of the 4-year cycle to give us an expected bottom date, and that is sitting at the 5th of October 2026. Okay, so that is going to be the expected bottom date. Now, if we look at that, we are still actually quite some time away from that bottom date. Looking at the bars, we are around 250 days or so, maybe a little bit less than 250 days from that bottom date, and Bitcoin has already seen, in terms of a percentage pullback, a pullback of around 50%, a massive pullback in the date we've already seen and the length of the bear market we've already seen. So a lot of people are wondering, is this going to impact the bear market? And the answer to that is, it may impact the bear market, but there is no way to actually guarantee or confirm it will until after the fact. And that is why we're falling back to those indicators we'll show you in a second, which we use to predict the bottom of the bear market. So let's go ahead and look at those indicators, and then we'll talk about where our next targets are, how the price action is developing. So we talked about this in one of our prior videos, and we're going to go over it one more time because these indicators have been historically perfect at predicting the macro bottom. These are going to be the Ichimoku cloud and the RSI when used in conjunction with one another. We take a look at two levels. We take a look on the 2-week chart, the baseline of the Ichimoku cloud, which is this red line, and we look at the leading span B of the Ichimoku cloud, which is this pinkish orangey line over here. Okay, what we have noticed is within a 2-week window of creating a bottom for Bitcoin, either 2 weeks before or after or on, so a 2-week window, we see the bottom for Bitcoin happen at around about the same time the baseline of the Ichimoku cloud breaks below or after breaking below the leading span B on the 2-week chart. That has almost always printed a macro bottom for Bitcoin. What we can see as well is if we look at the price action during that time, we have the RSI having broken below this 41 to 42 level, which is this lower white line, and it is in this capitulation territory. What we can see is after the RSI is able to break it back above the upper white line, which is sitting around 48, we then enter a macro uptrend. So we can use these two data points to give us a very tight range of where the bottom will likely be and when it is in, and then we can then back validate it when we see the momentum flip positive. So what I mean by that is if we take a look at this cycle, for instance, in the last one, we saw the baseline drop below the leading span B. We saw a hypothetical bottom. In that instance, I did call the bottom because we had that falling wedge pattern. Okay. We also had the downtrend, the RSI breakout, so we had a positive momentum shift. But if you weren't confident, you could wait for the RSI to break upwards. What did we see when it broke upwards? We saw a reversal develop and an uptrend. That validated that bottom, which occurred around 2 to 4 weeks ago. And the same thing can be done this cycle. So it's not so a matter of when it will bottom. We don't really care when it bottoms. If it bottoms on the 5th of October, as the 4-year cycle predicts, that just makes it easy. But the question is Could we see a bottom sooner based on the speed of the bear market? The answer to that is we could, but even if we do, we are still waiting for these validations to actually print a bottom and signal a bottom, and then we can actually go back and validate whether or not that was the bottom by using the RSI and using the momentum with the trigger points to do so. So the answer to that is it doesn't actually matter that much, because the date of the bottom isn't going to impact whether or not the bottom is in for Bitcoin or not. Other than the fact that it happens if it happens on the 4-year cycle expectation, because that will have psychological connotation attached to it, which will drive investors' decisions. So other than that, not too much of an impact. Let's take a look at the charts now from a technical perspective. On a 2-week perspective, guys, we have a lot going on. The first thing is, of course, we are breaking below the midline of the Gaussian channel. Now, we told you so many times in this channel that when we break into the Gaussian channel on the 2-week, we break the upper band of the Gaussian channel. When we see that breakdown, we will then see the most violent correction and fastest correction of the bear market. We've said that many times. We'll say it one more time. When we break the upper band of the Gaussian channel, we then enter our capitulation phase, and that phase is the most violent and fastest pull down or correction for Bitcoin during the bear market. Since we have broken into the Gaussian channel, we have seen a correction of 28% in, wait for it, in 14 days. Oh no, not 14 days, sorry, 19 days. 29% in 19 days. Absolutely insane stuff. Now, when we're looking at where we could go next, we can bring up our market side by A indicator. And what we can see here is that we are seeing a very similar pattern play out to what we saw in prior cycles, which is after we see the breakdown of the upper band of the Gaussian channel, we start to see these EMAs push downwards and cross over the 50 EMA. And when we start to see that happen, we generally begin to enter a little bit of this bottom phase. We start to see consolidation develop and start to see bottoms happen. Now, that is still not expected for at least another month and a half to 2 months, potentially late March, even into April. So there is still room for volatility to occur toward the downside, which could take us into and well below the Gaussian channel lower band to around that 200 EMA, putting us into that bottom territory, which is around 52 to 36,000. And we expect when we reach that range, we will then potentially enter some sort of slow down price action, some downward consolidation for Bitcoin that takes many more months to play out before we then reach an ultimate bottom and then continue back upwards. So again, how it plays out, the nuances of exactly how it plays out isn't too relevant. What we can watch currently is how the price action is reacting to the key levels and the technical levels, and then use historical price action to then potentially map out how it will continue. So in instance to this, it will likely continue towards the lower band. It will likely continue towards that 200 EMA and into that 52 to 36,000 region before we then start to see some proper sideways or downward consolidation. So again, the downtrend is still very much intact and the targets are still very much lower than they are. Let's move over, guys, to something like a weekly chart. So again, a lot has progressed in the market. All these levels we were watching before, all these indicators we were watching before, all the videos we did saying we're warning you of a crash, that has now happened, right? It is triggered, it's activated, it is done, it is finished. We have seen the crash play out in our very face. We're seeing it play out right now. We talked about the Gaussian channel lower band breaking, we would see a correction. We talked about the Ichimoku cloud leading span B breaking, we will see a correction. We talked about the 2-week 50 EMA breaking down, we will see a correction. Everything is playing out. The question is, how much lower will Bitcoin go and where are our supports? So let's take a look at that now. The expectation is Bitcoin goes lower. Where are the support levels we're watching? We have some pretty interesting support levels at around 60,000. 60,000, I'll go ahead and draw a vertical line in. 60,000 is going to be this top point here. We had this, again, double top bearish divergence print, but the initial top over here was around 60,000. That is going to act as a temporary support. And then the critical level of support is going to be the sell side liquidity level around again, this spans from around 48,000 up to around 54,000. This is going to be a major weekly level of support. We'd expect anything below here is when we're starting to get into the bottom territory, right? The bottom territory is going to be between around 32,000. The lowest 36 is most likely, up to around 52. So this region over here is kind of going to be our bottom region for Bitcoin. So as we start to approach 60,000, as we start to approach this gray box, it is more likely the volatility we have seen from the Gaussian channel breakdown is going to be coming to an end, and we are more likely going to be entering one of these more drawn out consolidations for quite some time into a bottom and then a macro reversal. And that is kind of what we're watching, of course. Now, will that play out perfectly? Who knows? But the charts are in favor of that scenario because this volatility we have seen is not going to continue forever. Remember, we told you there are 3 phases of the bear market. We have our mean reversion, which is the top to the 50 EMA. We have our consolidation above the 50 EMA. And then we have our capitulation, which is our violent correction. This violent correction has played out. 34% in less than 2 weeks, guys. It is playing out. We're not going to see another 34% correction in 2 weeks happen again. It is very unlikely. It is more likely we'll start to see that continued downward move, but happen over many more weeks and a more drawn out correction. So I'd expect this volatility to begin to come to an end. And by volatility, I mean, 30% in 2 weeks. We can still see larger corrections, 10%, 15% happen in short periods of time. But I do expect these larger moves, these volatile, aggressive red moves to begin to come to an end as we come into that $56,000 to $48,000 region, which is our sell-side liquidity level, which is our next major target essentially. And anything below here, we're more likely going to enter despair and desperation and depression, which is going to be more of this sideways consolidation type price action. So of course, we'll keep you up to date and we'll pay attention to how it is happening. What you need to know is that the trend is still very much downward. We are looking for lower targets. Everything is played out absolutely perfectly. And we do have some supports here at 60,000 and around that $54,000 to $48,000 region. On the immediate short term, again, this price action is just violent. It is absolutely violent. This kind of downward move we're seeing here, this is what we call emotional price action, right? This is people panic selling. This is people being fearful of the market, logging into their accounts, selling their ETFs, doing absolutely everything they can. We're not seeing any clear price patterns. We're not seeing any clear structures. All historical levels are being either underappreciated or completely ignored. Momentum is just downward spiraling with very little absorption. This is complete emotional price action, and this is exactly what we expected. We anticipated this move, we were expecting this move, but it is amazing really to see it playing out in real time. Expect to see lower prices, and we're going to be waiting, and we'll talk you through it when we get up to it. So thank you for tuning in, guys. Very confusing stuff if you look at it from a small picture. When you zoom out to the bigger picture, it becomes very much more apparent. And when you look backwards, like look back a week, look back 2 weeks, and just try to remember what we were telling you about these trigger points. We were telling you very clearly, we break these levels, we're going to see these aggressive corrections. We are seeing these aggressive corrections now. So don't sit here and be like, oh, what do I need to do? What do I need to do? Just let it happen and actually allow that move to play out. We don't need to be making too many decisions all the time. We can just allow the market to do its thing, take a step back, let it do its thing, let it find its support wherever it's going to find, and then jump in, because we're not losing anything by watching this. In fact, we're gaining by watching this, because every time it goes down, you get an easier and lower buy-in price when you're looking to do your macro entry. So thanks for tuning in. Have a fantastic day. Catch you all in tomorrow's video. Look forward to seeing you then. Bye.